Hi, this is the MaxBot channel. Now I will be doing a turbo deposit boost with the help of the most powerful robot. Bot is a paid tool, but you can get it absolutely free right now. Access to the bot is given to you forever. Follow the link in the description, follow the instructions and start earning with the help of neural network with signals accuracy of 90% on average. The promotion, where you can get the bot for free, will last for 1 month. The bot gives an unlimited number of signals. You get the full version without restrictions, forever. Link in the description below this video. Now I start working on the currency pairs Swiss franc, Japanese yen, timeframe 1 minute. Artificial intelligence quickly gives a recommendation, higher. The market entry point is $500. I will conduct each subsequent transaction increasing the investment amount by $100. At the end of the work we will summarize the results and calculate the total profit. Friends, take part in our big contest with a prize of $1,000 for one random comment. The conditions are simple. Watch this video in its entirety, give it a like, subscribe to the channel and write one comment on the topic of trading under this video. I will choose 2 winners using randomizer and publish the results in my Telegram channel, where our team also shares knowledge about trading and helps traders to learn. The link is in the description, subscribe. The contest is held every week. And while our first trade is wrapping up safely, I'll start telling you about deciphering central bank policy, how interest rate decisions affect your trades. Central banks are pivotal institutions in the global financial system, wielding immense influence over economic conditions, financial markets, and currency values. Their primary tools, including interest rate adjustments, asset purchases, and communication strategies, directly impact currency markets, making them a critical factor for traders to understand. For those trading currency pairs on options brokers, central bank policies, especially interest rate decisions, play a crucial role in determining market direction and volatility. Central banks, such as the Federal Reserve in the United States, the European Central Bank, the Bank of England, the Bank of Japan, and others, are responsible for managing a country's monetary policy. One of their primary objectives is to maintain economic stability, which involves managing inflation, promoting employment, and ensuring stable economic growth. To achieve these goals, central banks use various monetary policy tools, with interest rate adjustments being one of the most prominent. What are interest rates? Interest rates represent the cost of borrowing money or the return on savings. Central banks control short-term interest rates, which serve as a benchmark for other interest rates in the economy, such as those for mortgages, loans, and savings accounts. When a central bank raises or lowers its key interest rate, it influences the entire spectrum of borrowing and lending rates in the economy. Nominal interest rates. These are the rates set by central banks or agreed upon between lenders and borrowers. For example, the Federal Reserve's federal funds rate is the rate at which banks lend to each other overnight. Real interest rates adjust nominal rates for inflation. They are a more accurate reflection of the purchasing power of the money being lent or borrowed. Friends, I want to remind you once again that we are currently running a super promotion for 1 month. Bot is a paid tool, but right now you can get it for free and forever. You will get full functionality. Follow the link in the description, follow the instructions of the neural network and start extracting maximum profit from the market with the help of artificial intelligence. Working according to this structure, you will become much richer. Neural network knows everything that its developers have studied for 9 years. And all this experience is given to you. The bot will triple your deposit on the first day. The trust you put in it will justify itself in the first hours of work. In the meantime, I'm continuing my drive to maximize my profits. I closed a trade-in plus again and am opening a new one right now. Interest rate decisions by central banks have a direct and significant impact on currency values. Interest rates are a key determinant of a currency's strength. When a central bank raises interest rates, it generally leads to an appreciation of the currency, while a rate cut tends to weaken it. Higher interest rates. When a central bank raises interest rates, the currency tends to appreciate. This is because higher interest rates offer better returns on investments denominated in that currency, attracting foreign capital. For example, if the Federal Reserve raises interest rates, the USD may strengthen as investors seek higher yields in US assets. Lower interest rates. Conversely, when a central bank lowers interest rates, the currency tends to depreciate. Lower rates reduce the returns on investments in that currency, leading to capital outflows as investors seek higher yields elsewhere. For instance, if the European Central Bank cuts interest rates, the euro may weaken relative to other currencies. Interest rate differentials between two countries play a crucial role in determining the exchange rate of a currency pair. Traders often compare the interest rates of two currencies to identify potential trading opportunities. A common trading strategy that takes advantage of interest rate differentials is the carry trade. In a carry trade, traders borrow money in a currency with a low interest rate and invest it in a currency with a higher interest rate. The goal is to profit from the difference between the two rates. For example, a trader might borrow in Japanese yen and invest in Australian dollars if the AUD offers a higher interest rate. Changes in interest rate differentials can cause significant fluctuations in currency pairs, providing trading opportunities on options platforms. Relative yield comparison. Traders compare the yields of different currencies to determine which currency is likely to appreciate or depreciate. When one central bank raises interest rates while another holds or lowers them, the currency with a higher yield tends to strengthen against the one with a lower yield. So guys, the bot has again correctly indicated the direction of price movement and I'm maximizing the profit. Plus $819 is already in my pocket. I made a turbo boost of the deposit, but I want to make the final step. I will enter $2,000 into the market. Get the bot right now for free and forever. Get unlimited signals and earn like me. Link in the description. The bot is a paid tool, but now we have a 1-month promotion. Hurry up and get neural network forever for free. You will also get access to a VIP chat room with analytics and predictions from experts. Now take a look at the screen. These are screenshots with feedback from traders who have changed their lives for the better with the help of MaxBot. You can read all the feedback in a special Telegram channel. The link is also in the description of this video. Another huge advantage of this robot is its ability to work with over-the-counter currency pairs. You can make money when the exchanges are asleep, during late hours of the day, weekends and holidays. To get a list of OTC currency pairs, send the bot the command /OTC in chat. The developers have taught its artificial intelligence to use a wide arsenal of key skills that every top trader needs. The ability to use 30 indicators, technical and candlestick analysis and price action. That's why its passability is so high. So, the deal is done. Plus $1,820. Total profit for 6 quick transactions, $4,987. Thank you, MaxBot. Take this tool for free, guys. Link in the description. Subscribe to the channel and give it a like. See you soon.